This is why you should be revisiting your 2019 and 2020 prospects right now. Welcome to the Industry Leader Update. These are challenging times for reverse mortgage originators and also our traditional mortgage counterparts. We have rapidly increasing interest rates, and that's reduced potential loan proceeds and purchasing power, and then HECM-to-HECM refinance volume has dwindled to a trickle. In such times, it's not uncommon for one to feel that the window of opportunity has closed, but has it? For some it has, and for others it has not. Exhibit 1, potential borrowers who may have qualified last year with enough money to eliminate their existing mortgage and also pocket a little money, they may be in for a very rude awakening. And then you have those who had little or no mortgage balance. They may qualify, but they might feel that the loan has lost its appeal with less money. Brenda Grauer, a reverse mortgage counselor with Housing Options Provided for the Elderly, or HOPE, spoke with Reverse Mortgage Daily, or RMD, earlier this month and recounted this story. Last year, in doing the calculation for a couple, the gross loan proceeds before fees and insurance would have been approximately $162,000 on a $300,000 home. 12 months later, that same couple would only get about $127 or 28% less in funds. Now, it's true. Prospective borrowers with significant mortgage payoffs who decided against a loan in 2021, they're more likely not to have the required equity to qualify. However, when it comes to the housing market, timing is everything. So we have Exhibit 2. Take, for example, Ruth. She was 73 years old in July 2019. At that time, the home was worth approximately $310,000, and her expected rate would have been 4.125%. That would have given her a gross principal limit, or GPL, of $185,690. But now fast forward to September 2022. Ruth may be 3 years older, but she's facing a much higher expected interest rate of 5.87%. Is all hope lost? Far from it. While her PLF has dropped from 5.99 to 5.16, that's a 14% reduction, her home value grew by 35%, making her home worth $418,000. And consequently, regardless of today's higher interest rates, her gross principal limit grew from $185,000 in 2019 to $215,000 or $16,000. While Ruth did put off getting a reverse mortgage until 3 years later, she had the good fortune of pursuing the loan after a record surge in home values. And now this formula actually works for homes that only appreciated 21% versus the national average of 42% during that same time period. As a reverse mortgage professional, now is the time to dive back into your old book of business or your CRM. And here's one suggested approach. Look for prospects you spoke with prior to 2021. Now add 30 to 40% of what their home was worth in 2019 or the typical appreciation rate in that market. Now adjust for their current age and a slightly lower mortgage balance, and then run the calculation at today's interest rates. Unless they refinanced their home or took a cash out refi, many are likely to qualify. And even better, some who couldn't qualify due to a high mortgage balance may actually qualify today thanks to their age and appreciated home value, and a few years of mortgage payments as well. The impact of increasing interest rates and lower principal limit factors cannot be denied, but neither can the mitigating factors of rising home values, at least for the present moment. Now, what are your thoughts? Leave your comments in the comment section below. And also, if you'd be so kind as to share this week's video, you can do that on your social media platforms, Facebook, LinkedIn, and Twitter. Don't forget, we have a YouTube channel. We welcome you to subscribe and hit the like button if you appreciate the content and the effort we put into that each and every week. Every week, we also have the nation's only weekly podcast for reverse mortgage professionals like yourself, HECM World Weekly. Apple users can listen and subscribe on iTunes. That's it for us. Be sure to return next Monday for more reverse mortgage news, commentary, and analysis here at HECM World.